All right, Michael. So let's stop from the very top right now. So, what have you heard over the last few weeks that's the one shift that surprised you the most?
Well, what surprised me the most is how quickly the conversation is becoming much more disciplined. Just 12 months ago, people were asking, what can AI do? And today they're asking, where is it actually creating value, real value? Banks, investors, regulators, they're all becoming more, I would say, commercially focused and very much in sync from that perspective.
All right. So, you've been also sitting down directly with banks and bankers. So, where are they actually directing their budget and attention right now? And just as important, what's dropped down their list of priorities?
That's a good question. I think banks are spending a lot less time chasing that shiny project or that shiny object that we often, um, as an ex-banker, are guilty of doing. But what we are seeing now is that banks are starting to focus and invest in fixing expensive problems. And these expensive problems haven't changed: risk, compliance, payments, resilience, and operational efficiency. That's the focus. So what's really dropped down the list are more the broad innovation programs, things that are without any clear commercial outcome. So really, technology is becoming a means, not the objective. That's what I'm seeing.
So, the other thing is, in regards to capital, where is it moving right now? And does that match the narrative that we're hearing publicly? Or is there more of a quieter story underneath what most people are not tracking yet?
Well, the public narrative is still dominated by the big headlines. There's no surprise there, large funding rounds. We're going to see that day in, day out. But quietly, this is what we're observing, a lot of serious capital is moving towards infrastructure, workflow software, really the unsexy stuff, regulated financial technology. And it's not always exciting enough to be front page news. That's why we're not seeing it on the front page. But that's often where the long term value really is created. So we're noticing that capital is moving towards infrastructure and execution, and that's the real focus.
So let's talk a little bit more about the regulatory side. Comparing what you've heard in North America versus what you've heard in the Middle East, are regulators converging around the same questions around stablecoins and AI, or are you seeing a real divergence in the approach?
Yeah, I think the destination looks very similar in both markets. The starting points are very different, and they change day to day. But I see more of a convergence than a divergence between the US, for example, and the Middle East. So different markets move at different speeds. Um, some want the headlines, some don't. But the questions are remarkably similar. And the questions include things like, how do we support innovation, protect our customers? How do we modernize financial infrastructure without increasing systemic risk? A lot of the modernization programs we've seen over the last 20 years, they've been described as trying to change an engine on a plane that's already flying. And these risks continue. And with AI and other technologies, we're noticing that the destination looks similar, but the starting points are different.
All right, Mike. So our last question is for the viewer that's watching this, something that they want to know most is, are sophisticated investors right now seeing something that we're not seeing in the broader market specifically? In other words, is the broader market caught up yet to what the news is showing us?
And it's a great question. I think if we call them sophisticated investors, as you described it, they're spending less time asking questions like, how clever is the actual technology? And they're spending more time asking, who will actually buy this? So, what we focus on is distribution, trust, relationships, a true, real regulatory understanding, and workflow integration. And these items that we've just gone through, they're becoming more valuable than another percentage point of a model performance. So technology is very much still continuing to create possibility, but execution creates the value. And overall, I think The market's definitely becoming way more disciplined in the last 12 months. And we believe the winners will be the companies that solve real problems. The ones that solve real problems earn trust and become part of how financial institutions actually operate day to day.
Awesome. Well, Michael, thank you so much for joining us here on Capital Markets. Very interesting conversation that you're having with people, and obviously the conversation that we just had right now. So once again, thanks for joining us today.
Thank you. Have a great day.